guys, Ryan here from the streets, and as you can probably hear, I got trains running like crazy out here, but I just got a deal from my real estate broker that he sent over to me. It's a 16 unit apartment complex, and I was going to run through the numbers myself, but I thought some of you have asked, so I'm going to record a video so you guys could all check out kind of the numbers that I run through, and so you could see exactly what I'm looking for and potentially get you started on building that cash flow and real estate empire you want. All right, so this is just the deal that came through from my broker, as you can see right here. And once you get in contact with brokers, they'll start sending you deals, and I've kind of given them my criteria. And right now we're looking in kind of the Sacramento Central Valley area, like in Northern California, and we're starting to shift our focus to out of state over to North Carolina. And I'll go into that in more detail later on, but right now let's just run through a quick deal for those of you that wanted to kind of see how I analyze the deals. And we're going to be using my spreadsheet that I've kind of created over the years. And this is an ever-growing spreadsheet, like it's changing all the time, but it's pretty much down pat of showing me the numbers that I want to see when looking at these and when we can make an investment. But just going through this, and it's pretty much just fill in the blank, and you could kind of see what you're looking at. So this is, so we got 630 Maple Street, and I'm pretty sure this is Sacramento. Yeah, Sacramento. And the best way to do it, we don't go too much into detail when you get these deals initially. Like, you need to run through the numbers and run through them really quick so you can kind of see if it's a deal you want to pursue more diligently, because if it's not worth your time, you don't need to fill in all the little details. So it's kind of a quick way to run through and see if it's something you might want to look at and do more research on. And the list price is $1.75 million. It's a 16 unit apartment complex. It looks in decent conditions, probably a C, maybe a C plus, B minus type of property. Let's zoom in a little bit. So 14, you can see right here, 14 2-bedroom, 1-bath units, and then 2 1-bedroom, 1-bath units. Built in 1963, 1.75 purchase price. Price per unit is $109,000 per unit. Let's see, let's start getting into the financials. So this is pretty much what you'll see in all of these, what do they call, pro formas that are sent over by the brokers. Pretty much kind of, this is their selling kind of brochure they give to all the investors. So it kind of helps investors to analyze deals, kind of see what area the properties are in, and then the financials on them. So you can see it's an up-and-coming market, according to the brokers. Sorry about all the noise that you're hearing in the background. We have a train station that comes right through. It almost comes through our house or our loft over here. But so we're going to see all the rents. This is existing rent roll. We're at $700, $650, $670, $630. So pretty much all the same. Seller subsidizes $500 per month for on-site manager. So they have an on-site manager on there. And one word of warning, when you get these brochures from the brokers, they'll always, for the most part, have current or market numbers and then pro forma numbers. These numbers right here on this right side are numbers you want to ignore. Like, they are saying if rents were at this price, if this, and it's all best case scenario. You need to run your numbers based off what the actual numbers are, and these are the actuals. So don't care about these. These mean nothing to you right now. So we got annual rent income is $132,000, so you could put that. And again, like, these are rough numbers, so you don't need to put the exact numbers in there. So $132,000 less 2% vacancy reserve, that's kind of low. Usually you would see 5%. Laundry income, gross operating income, So basically $131,000. We'll just put that in there. So $131,000 is a gross income. Operating expenses $60,000. Their net operating income, this is the big number you want to pay attention to. That's $71,000. So we could fill that in right here. And again, this is auto calculate. So 35% of the down payment of this purchase price, the list price, is $525,000. So that what would have to come out of our pocket. And the NOI, that's, like I said, it's a number you want to pay attention to, and that's going to be your gross income minus your expenses. So if you see right here, so our income $131,000 minus $60,000 is about $71,000 right here. So that's where you get your net operating income, and this does not subtract your debt service or your mortgage. So that's one thing you need to pay attention to. So right now we have this number, and you'll see what I mean in a second. 71,000 net operating income. Cap rates 4.1. Those are really low, and that's your return on investment if you paid cash on an investment. So if you paid $1.75 million, this is what you would see on your investment, 4.1%. And as we're in the bull market, I think we're in 9 years right now, the cap rates keep getting squeezed lower and lower. And when we're in a recession, cap rates go up. When things are going good, cap rates goes down. So we got 30-year amortization, loan period 5 years, using 4.35 interest rate, and that's not stuck in stone. That could be adjusted based off your lender, but that's what we're going to use right now. It's a conservative number. Our closing cost, I use 1.5% of the list price. That's $26,000, and I'm just assuming this is a rough number, $25,000 for the rehab cost. That could be more, could be less, but that's just basic for our basic calculations right here. And you could see our mortgage after paying our down payment is a $1.2 million, interest rate 4.3, 30-year amortization, and our monthly payment for the mortgage is about $6,000. That's monthly. So if we go over here, this is where these are the numbers you input. These are the numbers that come out. So total investment, that's our down payment plus the closing costs plus the rehab cost. I know this is a lot of math, but I swear it's easier than it looks. Cost per door, $109,000. You also saw that somewhere in the brochure they sent us. Less debt service. So our NOI, this is where you could kind of analyze these numbers. Our NOI is $71,000. That's profit before the mortgage payments. So now $71,000 minus our mortgage payments for the year equals you're losing $2,000 per year. This does not look like a good deal for me right now. And so your cash on cash return, our total investment, $576,000 divided by $1.75 million. Or divided by, hold on, I got mixed up for a second. You can see our return, negative $2,000 divided by our investment is negative 0.4%, which is terrible, because the only thing we're looking for a cash flowing asset. We want from day one at least an 8% return, at least. So I would love to hear your comments on this investment and if people are actually buying these properties. But right now, because there's so much money out there, foreign investors and a lot of people that have high net worths are buying these negative cash flowing properties because they don't really care about the return. They're using real estate as a store of value, because money, as you might have seen on my Instagram and then some of our blogs, like US dollars are getting devalued. So they just use it as a way to beat inflation. So what do we do about this? We could just ignore the deal and just say, we could send our broker, say, hey, we don't want to mess with something that's negative cash flowing. Or you could kind of play around with these numbers and say 125 million, still not even close. I want to get, remember, at least an 8% cash on cash. So we're talking about at least about $1 million investment. Let's see, 1.1 million. See what we get. 1. So about 6. So it'll be about 150. So that gives you about, I say about $1 million. This would be the most I would invest for this property. And most likely they would laugh at me for this offer, so I probably wouldn't even mess with this. And this is one of the reasons why we are looking out of state, because the cash on cash returns in California are getting pretty insane. They're getting, you see, into the negative number. So with this, with what it's listed at, 1.75, just in closing, a negative cash flowing property, we don't mess with those. I'm going to send my broker and tell him this is the numbers I got, and unless you could find properties that are giving us that 8% cash on cash return, we are going to look elsewhere. Sucks for the broker, but we got to take care of our business. Our money's important to us, and we're not trying to lose it. So I hope that helps out for all of you that are kind of trying to get into the real estate game down the road. And there's definitely a lot to learn, but this is kind of a good little start just to kind of see how you go through numbers and what you're looking for. The main thing I'm looking for is the cash on cash return. All right, everybody, I'll catch you guys later. Be sure to check out thestreets.co, as we have some exciting things coming your way. We have a few real estate tycoons coming to teach us about investing in real estate and how they've created financial freedom in a span of 7 years. Went from 0 apartment units to 800, and I think it's 844 units they now own in a span of 7 years. It got to that point. So it is possible. Stay tuned. See you guys soon.